Hello and welcome to the day ahead. It is Monday, April 11th. I'm Andrew Gagan. Well, global markets were a mixed bag to end last week. US equities tracking higher for the first session in two, with the commodities complex driving the FTSE to its fifth straight week of gains. Stateside, markets were mixed at the end, with oil and financials leading gains, though they were somewhat offset by falls in tech and consumer goods. For the week, all three of the majors losing ground for the first time in a month, as investors continue to digest the impact of a more hawkish Fed. Treasury markets continue to track higher, with the 10-year yield touching a three-year high, which helped financials recover from 13-month lows. Tech shares taking a hit, led by Tesla, Nvidia and Google. Now, that comes as Wall Street gears up for earnings season, with the big banks kicking off the first quarter numbers on Thursday. The market is forecasting a large drop in earnings from a year earlier, when they benefited from exceptionally strong deal-making and trading. More broadly though, analysts are expecting another bumper quarter, with FaceSet tipping earnings growth of more than 10%, marking its fifth consecutive quarter of earnings growth above that figure. Turning to the FX market, and the greenback rallied over the weekend, notching its biggest weekly gain in 1 month, with the dollar index hitting 100 for the first time in nearly 2 years, bolstered by the prospect of a more aggressive tightening cycle from the FOMC. The yen touching a weekly high, edging closer to its 7-year peak. Sterling and euro again lost ground versus the big dollar, with the euro down for a 7th consecutive session as the impact of the war in Ukraine weighs on that. And the presidential election in France showed incumbent Emmanuel Macron and his far-right rival Marine Le Pen will battle it out for a runoff vote on April 24th. If early exit polls suggest a Le Pen win, the market would see that as yet another reason to sell down the currency. Looking at the week ahead, focus remains on inflation, with both China and the US releasing price data. Economists are forecasting Tuesday's headline print in the US to again lift by 1.2% in March, taking the annual rate to an eye-watering 8.1%, holding above 40-year highs. Let's come back home then, and the local market expected to start the week higher. SPI futures currently up just shy of 0.4%. The 10-year Treasury yield just above 3%, and markets are fully priced in a lift-off in rates to 0.25% at the RBA's June meeting. The Aussie dollar falling from highs near 74.9 and currently sitting at 74.6 US cents. Global oil prices rising by 2% on Friday, as crude traders covered short positions ahead of the weekend. The price of Brent at $102 US a barrel. Iron ore futures losing 0.7% to $155 a tonne, with weaker Chinese demand due to the surge in COVID cases there, pulling the iron ore price back 2.8% for the week. However, prices for metallurgical coal are rising, with increased buying on international markets. The gold futures price rising 0.4% to $1,945 an ounce. Looking ahead this week, the focus will be on both business and consumer sentiment and jobs. The market is tipping around 40,000 jobs to be created in March, with the unemployment rate again falling to 3.9% from 4%, which is its lowest level since 1974. Well, and jobs will be a feature of the forthcoming election, with Australians heading to the polls on May 21st. Prime Minister Scott Morrison triggering the 6-week campaign yesterday, with economic recovery and cost of living pressures also taking centre stage. Opinion polls show the coalition trailing the opposition, though the same can be said about the lead up to the 2019 election, which the coalition won. Well, Labor's primary vote has dropped to 37%, with the coalition steady at 36% in the latest poll from The Australian over the weekend. On a two-party preferred basis, Labor's lead has narrowed 53 to 47. While Scott Morrison has managed to open up a lead over Anthony Albanese for preferred Prime Minister, the PM will use the upcoming campaign to prove Labor will weaken the economy with higher taxes and deficits.
It's a choice between a strong economy and a Labor opposition that would weaken it. It's a choice between an economic recovery that is leading the world and a Labor opposition that would weaken it. It's a choice between responsible financial management that has seen Australia maintain its AAA credit rating in the most extreme of circumstances, and has seen the largest budget turnaround in the last 12 months that we have seen in 70 years, and a Labor opposition that you know can't manage money.
Well, Labor leader Anthony Albanese will lead a Better Future campaign, saying the only way Australia can achieve that is for people to vote in a better government.
Australians deserve better. This government doesn't have an agenda for today, let alone a vision for tomorrow. They demonstrated that in their budget, which was nothing more than a ploy for an election campaign, with one-off payments that stop when the votes are counted, which they think will be enough to give them a second decade in office.
And so begins a 6-week election campaign. That is your day ahead. See you again tomorrow.